Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of January 13th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week, at the end of the week, we did see Maryland mortgage rates tick lower after a disappointing December jobs report came out. If you look at the bond chart on the screen, you can see that big giant green candle on Friday. That was where the bond rallied and rates did move lower after a disappointing jobs report. If you look, the bond was trending lower in anticipation of a good jobs report, moving rates higher, and then a good rebound. But we are capped at a line of resistance right there. That is, if we can't break through that, the bond could turn lower and you can see rates move higher. So we would recommend locking in the gains that you got if the bond starts to move lower this week as we start the week. If we can break through that, that's great. But just be mindful, the long-term trend for mortgage bonds is for them to sell off and move lower, which means the long-term trend for interest rates is for them to move higher as 2014 goes on. We talked about a lot of those factors in last week's updates. If you didn't see that, definitely watch that. Now let's dig into that jobs report. The December 2013 jobs report was released Friday by the U.S. Labor Department, and it came out 74,000 jobs were created. We were expecting 197,000, building on a great jobs report from November. So that was a stinker, totally unexpected, caught the market by surprise. And then contradictory in the report, you didn't create a lot of jobs, but the unemployment rate dropped from 7% to 6.7%. How does that happen? Well, it certainly wasn't because people went back to work. We created less jobs. So what happened was 346,000 people actually dropped out of the workforce, no longer calculating that unemployment number, so that's why the number went down. So not people going back to work, people just stopped looking, stopped being counted. So a better read on the unemployment rate and who's working, who's not, is the labor force participation rate, the LFPR. Now that dropped down to 62.8%, the low it hit in October, the lowest since 1978. That's in line with the jobs report. Less jobs created, less people working. So the LFPR measures the number of people 16 years and older that are eligible to work, actually working. We got to get that number up to get a good recovery in the labor market. Now, Thursday we saw the weekly initial jobless claims come out. It did drop 15,000 claims down to 330,000 claims. We were expecting 338,000, only got 330,000. That's not going to have a big effect on the market because of the bad jobs report. We need to get the initial jobless claims down below 300,000 in order to get a labor market recovery. We've been trending up the last couple weeks in initial jobless claims. That could explain the bad jobs report. And then some big mortgage rules took effect on Friday, January 10th, 2014. Qualified mortgage went into effect, QM, and the ability to repay called ATR. Both of those are now in effect, went into effect January 10th, and they could affect your buying process, your mortgage process. For most people, QM and ATR, it's going to be business as usual if you're getting a conventional loan, FHA loan, VA, USDA, whatever. Not much changes. But if you're trying to do a couple things that could affect you, one of those is if you want to get a conventional loan and you want to buy out your mortgage insurance called borrower paid upfront mortgage insurance, that could be a problem because part of this QM rule is there's a 3% cap on fees. Points and fees. So the borrower up front is considered points or fees, so it's calculated in that cap, and the fee with your normal fees, if you're putting down less than 10%, could push you over the limit. So it may mean that instead of putting 5% down and having the ability to buy out your mortgage insurance, you'd have to put 10% down to buy it out to be under the 3% cap. The other effect is going to be if you want to buy your rate down with discount points, those are calculated into the 3% cap. In some instances they are, some they're not, so it could be you may be able to buy some down, but not as much as you want. So you have to do the calculation on that. So those are the two things you may see affect you from those two rules that went into effect on Friday. But for the most part, business as usual. In the local news, the next free first-time homebuyer seminar is Saturday, January 25th. That is from 10 a.m. to noon. That is in Towson, Maryland, at the Baltimore Sheraton North Hotel on Delaney Road. You can register for that event by giving us a call at 410-412-3319 or register online, www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week.